To
Welcome everybody to the Chinchilla Pickin' Podcast. It is August the 24th, 2025 at 4:09 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds, the Rambo of Capitalism, was it? Himself, Brandon Beaver.
that is me.
There you go.
I need no introduction, but I appreciate it.
Mr. John Galt
Take it.
himself. All right. Well, I tell you what, yeah. If you're wondering, like, doesn't David usually say 4 o'clock for this? Well, yes, but my computer decided to break down right before we went on here, and I'm going blind with no notes. But I remember my notes. Hopefully I
We'll
remember my
see.
notes. I should write them down, but I got away from handwriting them. I think I handwrote them the first year, and then ever since that, I got away from it.
I don't handwrite anything. Everything is on this computer. So if mine ever goes down, we're screwed.
Right? So, yes. I did tease this podcast out with a quick TikTok and Instagram reel out. I recorded it about an hour before this we started recording this. So I kind of teased, about some things I was going to talk about. Hopefully we're going to hear that. I know we'll hear about Nvidia because I teased about that, and I know I'm probably going to try to sneak in some about Metsera and what's going on there. But first, before we get into the meat of the show, I want to talk for 30 to 60 seconds here, Brandon, if you don't mind, about
Sure.
bullish.
Okay.
I had a lot of people ask me questions about bullish, and they're like, "Hey, Dave, you said buy bullish on the IPO. What's going on?" Bullish went down. Bullish did go down. I thought bullish was going to continue to go down. Uh, Eventually, it was going to bottom after the hype stalled or dropped or finished, and I see it going above 100. Uh, I see it going above 100 before the end of this year, as long as Bitcoin does what Bitcoin's meant to do. I say that to for people, right now is a good time to buy bullish. It's at a good price. It's moving up. I've been DCAing. My dollar cost average is less than $80. I'm almost at profitable. If you haven't been DCAing, and you're going in right now is a good time to buy. I would say go ahead and buy in. I'm hoping it goes above 100, but to be honest, just because of how much frustration this company has given me, I might sell if it goes above 90. Just to be transparent with everybody listening. That's where my thoughts at with this. I do plan to take that money that I make off that and reinvest in other means, but bullish, yes.
So I'm going to take a minute to sneak this in while you have no room to hammer me on the valuation since you just talked about bullish. Uh,
Okay, all right, go ahead.
Palantir, Palantir's got a great pullback. I mean, almost every pullback here is like 20 to 40% somewhere around there every time it happens. And
Pull
now,
back for a reason.
well, no, well, it's market sentiment. I mean,
Is it
I
market
get so
sentiment?
tired, Dave, of hearing the major media news use the term the Great Rotation. Because every time people take some profits on tech, there's, oh, it's a great rotation. They're not going to be the market leaders anymore. And it just scares half their viewership out of their positions with no good reason whatsoever because the great rotation is always a head fake. And we always have the same seven or eight leaders come out the end of this, as we have for 20 years almost.
Yeah, so I mean there is okay, there is a rotation that happens from time to time. There is cyclical stocks. Yes. You cannot use inflammatory terms all the time, but people get sick and tired of them like Brandon is right here. The talking heads on TV, on CNBC, Bloomberg, Cheddar, Fox Business, whatever business stock news channel you watch, there's going to be talking heads and they're going to have to hype up everything, like how I criticized Phil LeBlanc for being the biggest douche on TV back in March, um or April. It was April, wasn't it? Yes. And
Hey, no inflammatory terms,
yeah,
Dave.
right. And so, they're going to do what they're going to do, but the reason why we watch them is because we get real-time news in real time. And that's why we watch that. We see the interviews with the CEOs, and so you kind of get a feel for the CEOs. You
Yeah,
see
they never
things how
lie.
they happen, huh?
They never lie.
Oh well, I'm not saying they, I'm not saying they never tell the truth. Every now and then one does, but uh, what I'm what I'm saying is you kind of get a feel for the taste for them, or whether or not you want to invest in this company. There's reasons why we watch those channels, and it's not for the hype. Sorry, I left my phone
So
on.
yeah,
My
so
phone is ringing.
great
How
rotation.
unprofessional. We've
So,
done this for how many years now? It's the first time I've ever done
you
this.
know what this was? It wasn't a great rotation. It was a broadening of the market, and what we wound up with at the end of the week was actually a good thing for the tech stocks and for every stock in the S&P 500.
Well,
Broader sentiment is a good thing.
yeah, and
Will drive
we're
us.
gonna we're gonna get into details why. So before we get going, because I know where this is headed, and I know we're gonna get into the details. Let me do the introduction, and Brandon, you can lead off. How about that?
Sure.
Because I know where this is headed, and I got some things I want to talk about. Again, it is off my head because my notes are gone, lost. But I'm pretty sure I remember the
Yeah.
numbers exactly. I'm
Dave
gonna
and
write them
I
down as you
have
talk.
been
I'm gonna write them down as you talk.
Dave and I have known each other for so long and done this show now for so long that we didn't even talk about what we're gonna say on this.
Actually, we didn't,
So
did we?
no,
We
we
just went
didn't.
right in.
So he knows where this is going because he's got a Vulcan mind melt on me, and he can just read my mind.
Yes, yes, yeah. It can't be just years and years of doing the podcast with Brandon every single Sunday for the last I don't know how many years. All right, rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other we're going to talk about. You actually hear the live back and forth here on the show. The bicker and the banner too. I forgot that part. Sorry, and the live back and forth right here on the show for you. Brandon, take it away.
All right. Well, I mean, just ended up being a good week altogether at the end of it, didn't it? I mean, it was pretty volatile there. And I think the market was kind of front running what they thought was going to be negative news from Jay Powell. They didn't get that.
They
We didn't
got
get
positive news,
the
and that's what I
positive.
wanted to
Yes.
talk about for a few minutes.
Sure.
Was what Jay Powell actually said. Jay Powell was worried about a tightening job market and new fears of inflation not being fully tamed. So the job numbers are what's going to be in focus when they come out first week in September. Those are going to be what they're looking at, what's going to determine whether or not they do a rate cut. But he did say that a rate cut is way more likely now because of the bad job numbers and because inflation has ticked up 0.1%. So because of those things, that's what they're looking at for a percentage. Now, is that a good thing or a bad thing? Brandon, I have some thoughts, but I want to hear your first thought.
Well, I mean, you just saw, I mean, like the experts were saying there was a 75% chance of a rate cut in September. And then after the speech, it went up to 91%. And you saw the market's reaction. It was like 1 or 2% gain for the Nasdaq and the S&P 500 off that news. Um, when Jerome Powell started highlighting labor risks, that was actually good news to people because that was one of the market's concerns. The first concern was earnings. We conquered that. The earnings Q2 was good. So revenue growth rate for the S&P 500 was 6.3%, highest level since quarter 3 2022. That's awesome. Um, they were projecting an earnings growth rate of 4.9%. Um,
What was
which
the actual
that
GDP for Q2?
what was what?
Are you talking GDP for Q2?
No. I'm talking about earnings growth rate.
Oh, earnings growth for the S&P. Gotcha.
Yes, yeah. And we had double digit earnings growth rate.
Well, that's fantastic.
That's fantastic. Absolutely. So that was the first set of good news that we've had. I mean, Walmart just reported Q2. Most of the companies have already reported their Q2 earnings. So with that in the rearview mirror, we can look at that. That's a positive surprise for the
Yeah.
market.
And I was surprised to see in Walmart's earnings how they made a statement about they actually are concerned about tariffs because they can't pass them all. They can't force all suppliers to take that burden on themselves, which is what they said earlier in the year. And now they're saying that they're going to have to eat some of that cost.
Well, yeah, and you know what sucks about it too, a lot of companies are realizing that if you're using your own shipping account, that's essentially your agreement to cover the cost of the tariffs. The supplier
Yes.
won't do it. So if you're the end user like Walmart or any company that's here in the United States and you're importing something over, you're doing it on one of your shipping accounts, you got to cover it
Yep.
most of the time. So a lot of people are seeing that. But I mean, we just had a pretty good quarter. I would call it a blowout earnings quarter for the entire S&P 500. That was awesome. So we got that out of the way. The earnings,
We're still getting earnings reported. That's one of the things I'm talking about.
yeah, but the majority of it is over. The
Yes.
majority of it's been reported. The majority of it's been good to great news. Um, that was one worry. The other worry is the labor market. Now that the Federal Reserve is focusing on the labor market, people are understanding that there's a great possibility that if we start to see more labor weakness, that the Federal Reserve cuts the interest rates and starts to provide a backdrop for easing, an easier monetary environment. So that's the second piece of good news. It's not over. We don't know where this is going to end with the labor market, but at least we know the Federal Reserve is watching it and that the Federal Reserve, should hopefully have our backs on this.
Right.
So earnings were good despite expectations for them to be terrible. Now the
Well, I mean, so they everybody who expected terrible earnings, first of all, for Q2, just pushed it forward. They said, well, they're not going to hit the tariffs hit yet. They're not going to have the bad earnings. The consumer hasn't stopped spending yet. That's going to happen now in Q3, and that's what they're saying.
a large portion of the tariffs came into effect in April, which was the beginning of Q2.
I
So
know, but I'm talking about the people who are on the big news channels or anything pushing that narrative or have just pushed the narrative out a quarter.
right. Well, then and then inflate. So we had the earnings situation. We had the labor markets, worries, and then we had inflation worries, and inflation came out moderate. Wasn't
I am worried about the tariffs impact and inflation's not starting to that has ticked higher 2 months in a row. I am concerned, not worried, concerned about the inflation. Uh, but the tariffs do now that Walmart has said, "Hey, we're gonna have to eat some of this." That does concern me.
it does me too. I'm not like it's still a risk,
Yeah, very much so.
but
Because if you're shopping at Walmart, I mean, you're that's usually considered a discount store, somewhere where you're going because you're trying to save money. You can't take a what 5% increase, or
right.
can you?
No, I mean no. The economy lives on margins. That's the problem.
And Walmart, because of their business model, has a thin margin,
Yeah.
and that's how they operate. They operate by selling 1 million of these things, not by selling 1,000 with a 500% profit margin. You know what I mean?
Well, and Walmart still had a good quarter. It's just, their guidance was a little meh, and they had an earnings miss. But even though it was a good quarter, earnings expectations were super duper high. And when you've got a grocery retailer trading at 38 times earnings, you can't afford an earnings miss. So the
Yeah,
stock's going to come down.
yeah.
Um, but I mean, just my takeaways from the past week after Powell's Jackson Hole speech came off more dovish than we expected it to.
That's the
Um,
term everybody's using. They're saying Powell has turned dovish.
I don't
He's
know
no
that he's
longer no
turned.
longer the hawk. He's the dove.
I mean, it's more of a middle ground, which is better news than being one
Yeah,
extremely.
he's not dovish. If he was dovish, he would do a half a point drop because a quarter point is not going to be enough, in my opinion. Here's why. Do I have a moment to say here's why, or do you
Yeah,
want to continue?
absolutely. Yeah, go
All
ahead.
right. A quarter point is just going to make everybody feel like they're still not going to make the moves they want to make until they get more. So people who are waiting to buy a house till they get interest rate drop, they're like, well, we're going to wait for another 1% total interest rate drop. Well, that might be a while before you see that. If you see
Yeah,
that, and that's what some people have to get through. And smaller companies might be holding off on that business loan until
sure.
they get a bigger drop in the interest rate. You may not get that, and so we may not see the spur to the economy that we're hoping for with just a quarter point drop.
Well, housing prices never really came down,
They haven't.
which is crazy to me.
But that's
With the
that's because
higher
you still
interest
have
rates,
companies like BlackRock, State Street out there buying up houses right and left. And I don't know. It's hard because I juggle I juggle being a capitalist and the fact that these big, huge trillion-dollar companies up there buying these single-family homes.
Right, because what's supposed to happen when interest rates go up, home prices are supposed to fall to, a point where it's affordable for a new home buyer to enter into the housing market.
Yeah, and it hasn't because the companies are still buying up these properties.
Right. So, I mean, what do you do? Because now we're going to have potential interest rate cuts. And if that's what people are looking for before they buy a house is an interest rate cut, the other side of that is it may keep prices elevated anyways because demand's going to kick in from, the average everyday home buyer.
So two things is I would buy the home buyers on a dip in August and September, which
You think
they
so?
are on a
And
dip.
people did that on Friday.
Yeah,
Home
I would
builders went up.
buy them on the dip. Uh, that's not going to be sustained though because people are going to realize this is not enough,
Right.
right? This is not enough for these to happen. Not everybody's going to be jumping back into the market as soon as it happens. It's you might see refinancing take a bump up, but that's about it.
Right. I think this rally goes into next week. I think it.
And
I think it's got wings. I think it was strong. I think that's very good news that it's hard to shake off.
it depends on the video. The
Okay.
video reports on Wednesday. I'm expecting a good report from the video, but it's how good. I expect them to meet their expectations for the quarter, but their guidance is what I'm looking at going forward. Are they going to continue to guide at like 50% increase in revenue?
I would think
Or
that
are they going to scale it back now?
they just keep beating it. Yeah, you're right. They report on August 27th.
Dude, come on! I know
So you
when
should have
they.
had that on my calendar.
I've
I
already
know.
did an Instagram and TikTok post about it too, man. You missed
All
it.
right. Yeah, I missed it.
Come on.
I mean, it was one of my largest holdings. You'd think I would know that it's this week.
You should know when they report. Yeah, so
Unbelievable, guys.
going
Don't
to
do
be
what I do.
watching that report. Brandon will now be watching that report.
Yeah, don't do what I did and not know that. I would have known it eventually, right before the earnings.
You're like, why is it moving so much
You have
today?
to think, like we were talking about this. I've got like 18 companies in my portfolio now, and now I'm at my limit almost. I'm almost not going to buy anything just because it's getting hard for me to keep track of. I need to trim something, I think.
uh,
Which I did. I took Newmont. I took my profit on Newmont Metals just because I think, once you start to get up to 16%, 17% price to earnings ratio on a metals company, a non-productive gold, then, maybe time to take the earnings
there you
or
go.
take your profit off the top there. I wanted to go over something that I felt like I think is a very interesting and very useful thing. I talk about turnarounds a lot on this podcast.
You do. You really go into
Yeah.
them.
Yeah, because they're like one of my favorite things to invest in. And I want to talk about the utilization of the price to earnings ratio when you're looking at these turnarounds. One of the things that I talked about when I first started talking about Disney on this podcast and talking about their turnaround and my buy-in to that was my expectation to see the price of the stock hopefully go up, but the price to earnings ratio go down. I'm going to share my screen here real quick and I'll talk about it here so that people who are listening understand what I'm saying as well rather than just the YouTube people.
Uh-oh.
Let me show
Uh-oh.
you let me show you what I'm looking at here. So the top here, this I don't know, I'm colorblind, but I think it's orange. This orange line is Disney's price.
It is orange.
Down here is the price to earnings ratio, right? So at the very beginning of this, the you see the price to earnings ratio kicks in right here, close to October 2024. And this
Yep.
is because for a while prior to this, Disney wasn't making any money. And so if you don't have any earnings, there's nothing to divide the price by, right? And you can't divide anything by a negative. So there's no PE ratio up to here. Right here, we see the price to earnings ratio come into effect right around here in October 2024. And that's because Disney became profitable again. We saw some one-time effects to earnings, which, anytime a company makes an acquisition, um, that comes out of earnings. So the price to earnings ratio went up here because we were talking about, completing the purchase of Hulu. And then
That
down
was a
here,
big deal.
yeah, this other big piece of news. This was the Liberation Day tariff announcement that scared everybody into, selling their stocks back in April. A discerning eye here would see the stock price drop was actually less by quite a bit than the price to earnings ratio drop. Really, a discerning eye would look at this and say this is a buying opportunity because their earnings are increasing while the price is going down at the same time, if that makes sense, which is why this price to earnings ratio decreased so dramatically.
Yeah.
But the a point to make here, the price to earnings ratio, you could tell we've dropped near 52%. The stock has gone up about 32%. So you see them diverging. And right here's kind of where we're looking at where the stock is starting to moderate and become a little bit more normal. Um, a lot of people are probably seeing Disney show up on their value scans because Disney right now is trading at a price to earnings ratio of 18.63, which is much lower than its historical of like you can see at points it was up above 40%, 41%. Even if we go back 3 years, it was up here at 122.4%.
That is crazy. Is that
Yeah.
just because of Disney Plus, you think, or Hulu, or
Well, the reason why this price to earnings ratio was so high is because earnings were so depressed in the previous 12 months
yeah.
and the stock had stayed higher because people like me were expecting a turnaround. Does that make sense?
Yep.
So now we're on track, and this is one of the things I wanted to see with Disney was a declining price to earnings ratio with an increasing stock, and that's where we're at. Honestly, right now, I still think that Disney's a good value to buy in at. But you don't want to look at the historical price to earnings ratio because, I mean, obviously, 40%, 42%, 43%, and then going back in even further, when it was in the hundreds, that's not sustainable. When you're here, something's got to give. Either the price of the stock has got to drop dramatically or the earnings have got to catch up. And that price to earnings ratio, no matter what happens, comes back down to regular levels. Is that helpful?
Yes.
Yeah. So that's kind of one of the things that you're wanting to see with these turnarounds with companies that were once profitable, then they start losing money. The price to earnings ratio at that point is not even really something to look at. It doesn't even make any sense to look at it. But then once the price to earnings ratio does appear again, earnings are starting to turn back around. You want to see price going up, price to earnings ratio going down. That is a good indicator of sustainable growth for the company. Hopefully that
You
helps.
are a bunch of wow. Okay.
Yeah.
Brandon. Brandon, wow. Let's stop sharing. How about that? Let's do that first.
Well, I got to figure out how to stop sharing now. I'm not sharing anymore, am I? Am
You
I?
are, yes.
Oh, well, whatever. This is Ludwig von Mises for people who don't know. He's a Australian, or not Australian, but an Austrian business cycle economist
I
from the
can't
early 20th
believe.
hundreds. So no, look at this. This is a funny
No,
quote.
just stop sharing. Just hurry up and stop sharing.
I got.
uh,
How do I stop? Let's close
that's funny. We just lost half our viewership there.
it. No, we didn't.
Oh.
Well, I got to figure out how to stop sharing here, Dave. You'd think I would
You
know.
did. You stopped sharing.
Okay, good. All right, good. All right. So
You could tell somebody here doesn't
let me
do
just tell the story.
meetings.
Let me just tell you the story about this. 20th mid 20th century. There's a meeting. I think it was in Switzerland between the top economists of the Western Hemisphere, the Western societies, the capitalist societies in the 1950s.
Okay.
We're talking Milton Friedman, Friedrich von Hayek, this guy, And in the middle of this meeting, this guy, Ludwig von Mises, just shouts, "You're all a bunch of socialists," and then leaves very angrily. And he's talking to the most predominant capitalists in the world, and that's how much of a free market this guy was. He was calling Milton Friedman a socialist, but
Right. And if you know your history, those guys were not socialists. They were
right,
very
no,
much
not at
capitalists. He
all.
was just insulting them to their minds. So nice. Well, what else you got?
That's everything I got. What do you got?
Consider I got 3 lines I wrote down to recover my notes. That's all I
Nice,
got. So
nice.
let's do this. Let's see if I can do this. The video reports on Wednesday. That's one of them. I am expecting the video to come in and talk about their chips and the China trade and are they going to be able to sell these chips with China? I had some news on that. I don't have the numbers in front of me anymore. But what I'm looking for is how many and which ones. Secondly, is manufacturing plants. They need, I know part of the deal was to build some manufacturing plants here in the United States. Where are they being built? Are they being built? Are they making that deal or not? That was one of the deals that was going to be made. I want to see more news on that. But overall, I believe Nvidia is going to report good revenue, good top line numbers, and again continue that revenue forecast going forward. So good overall for them. But I would like to see the details on that. Secondly, Spotify. Spotify announced that they're raising rates again. This is after they finally had their first ever full year of profit. All 4 quarters last year were profitable. And so now we're still profitable. And now they have to raise rates in order to maintain the profitability, which I don't see a problem with that. If that's the way you have to do it, that's the way you have to do it. They're not raising by that much, just a few dollars per month for your whatever subscription service you have with Spotify. But Spotify is now raising rates again. Brandon, Spotify had a huge run up last year. They went from about 200 a share to over $700 a share over the past 1 year time.
Wow.
So huge run up. Would you buy them now that they're saying, hey, to maintain profitability, we got to raise rates? Is that a positive now looking at that since you like turnarounds? They've turned around, they finally went positive, profitable, and then they kept the profitability.
Yeah, which is good. It's just still a little too overvalued, in my opinion. I mean, it's huge market moat with Spotify. Just a brand name moat for listening to music and podcast and such. It's where we have our home, the Spotify. But
Yes.
the fact of the matter is just the price is just too it's too high for me.
Yeah, and we lost an advertiser because we don't have enough of you listening on Spotify, which is fine. We don't care.
Yeah, right.
Listen to us on Apple Podcasts, Good Pods, wherever you listen. Some people have just Googled us online. Now we're on YouTube. Listen to us wherever. We don't care.
Yeah.
But Spotify, yeah, yeah. Oh well.
Oh well. Yeah, I wouldn't buy it right now.
All right. Another headline I had was Coca-Cola was looking to sell Costa coffee. They are looking to go ahead and get rid of it. They recently just bought it for $4 billion, what I believe the number was. I'm going off the top of my head here. Again, I lost my notes. $4 billion just a few years ago, and now they're already trying to dump it off. I believe it did not get the traction they wanted. They bought it in order to compete with Starbucks products going on the shelves in all the grocery stores at that time. This was 2019, by the way. They went ahead and bought this in order to have some kind of competition. You had Pete's was a brand under Costa. Costa itself was another brand. They wanted to really push this and add some coffee flavored items to some of the Coke brands that were more well known. And this was something they just went ahead and bought. Costa at that time was reporting $1.8 billion in top line number or revenue number when they got bought out. So that was actually pretty fair value what Coca-Cola paid for them. Yeah, right now they're looking to get rid of them. So very interesting.
Yeah, it is. I do they still own equity in Monster?
They own Monster.
Yeah, okay. They've got yeah. No, it doesn't own it 100%. It's close.
Really?
Yeah, they got a 16.7% stake, but they've increased it recently to 19.36%.
Gotcha.
I mean, they could just utilize Monster. Monster's got a ton of energy drinks in the market that compete with
Yeah.
uh, the the shelf of Starbucks as well. I mean, the Java mochas, all that
Do
stuff that
now
Monster has out.
that's a question for you. Do energy drinks compete with coffee, or are they two separate markets and sectors?
Well, I mean, you have the Monster Java mochas and other coffee items that do.
People don't consider that coffee.
Yeah, they do.
No, they don't. No, they
Yeah, the
don't.
Java mochas. Yeah, yeah.
Only people like you who put like eight sugars in your coffee would consider that coffee.
Well, I mean, if I was on my way like to a job third shift or something like that, and I didn't make coffee, I just a fast fix to that would be to stop and get a Monster Java Mocha at Speedway or something.
You get the same amount of coffee if you get a low carb, sugar free monster than you if you got that coffee thing.
Okay.
I mean, if you love coffee that much, you would just get coffee in my mind.
I do think there's competition there. I do. Think back to your days in receiving at IKEA. The
Long
people, I
time
mean,
ago.
like, right, remember we
Yeah.
had a guy that used to brew a big pot of coffee back
Yep.
there, and either the forklift drivers were drinking their Monster or they were drinking the coffee.
It was either one or the other, but we all
Right.
had some caffeine. I was a coffee guy. I had the
Exactly.
coffee.
Which is why I think it's a competitor.
Fair enough. Fair enough. And I just so you know, I drink my coffee either black or I do like iced Americanos. I do Americanos with just light cream, never any sugar, never any sweetening.
Okay.
I'm sweet enough. I don't need to
And that
add it.
Americana is actually stronger than the regular coffee.
People say that, but you know, sorry, we're gonna go off script here, off stocks and investments for 1 second to talk about coffee because I want to educate the public on this. Everybody's like, "Oh yeah, espressos have way more caffeine than a regular cup of coffee." No,
It depends
Google
on
it.
how you make the coffee.
Google it. Look it up. Don't even Google. Look it up wherever you want to look it up. Things AI it, Google it. Go to Italy and ask an Italian it. There's a reason why they have multiple espressos throughout the course of the day. One espresso does not have the same amount of caffeine as one cup of coffee. You need 2 to 3 minimum espressos minimum to equal 1 cup of black coffee
What show
caffeine.
are we on right now?
Someone's listening, like, I thought we were talking about stocks and investments. David's on a
And then the
soapbox
weird
about
thing
coffee,
is that Americana is just the coffee that Europe thinks that America has, but we really don't.
right? Yes. An Americano, yes. It's just espresso with water.
Right.
And a cappuccino is espresso with milk. And that's what those two things are. And then you add your flavorings or creamers or what have you to that.
Such
That's what
useful
they are.
information. Such useful information here.
I know, right? Go trade stocks off of that.
What are we even
Um,
talking about?
Sell Starbucks.
Services.
Sell Starbucks. I wouldn't buy it
Yeah.
right now.
No. Well,
Actually, I would.
Starbucks.
No, I got that wrong. I got that backwards. Buy Starbucks.
Yeah, I
I
think
like the
Starbucks is
CEO.
fine. I
He's the
think it's
one who came from Chipotle. I like him. I like what he's doing there. I
yeah,
do like Starbucks right now as a buy.
yeah, and he did good
So.
things for Chipotle.
Last thing, Metsera, guys. I want to talk about Metsera for 1 second. This is only going to take a minute. Metsera was a company that I was said buy here on the show way back in the day. It jumped up. I over doubled my money. I was happy. I sold 20% of it, right? I was like, I sold a little bit because I was worried it was too high. It moved too much too fast. For no reason. I didn't see any actual fundamental reasons for this. It was just speculation, pure speculation. Move the stock. So I took 20% off the top. Well, it dropped back down quite a bit. It never got close to the place where I bought it at. Right. So I wasn't concerned about my money or my position. But I went ahead and bought back in on Friday. And so now I went ahead with that 20% and put it back in a little higher than what I did originally put that 20% back in at the price wise, but it was just 20% of the total volume. And it's because I believe Metsera is in a good spot now, and it's going to just continue to move higher, hopefully at a slower rate, more controlled rate, and wait for news to drive the stock higher because I believe news will drive that stock higher. People are tired of Novo Nordisk. People are tired of Mounjaro and Ozempic and these GLP-1s. We're looking for something a little bit different, and that's what Metsera offers. With a longer half-life, it lasts longer and it has way more productive. Now, the one thing I'm going to get an update on, and I'll try to provide it for next week, is Eli Lilly's star cholesterol drug, the one that gets rid of all 98% of cholesterol in your body, bad cholesterol in your body, if you take it for up to 4 months. That's the one I'm going to try to get an update on, see where they're at on the tests and on the clinical trials of that, and see if that's still moving along at a good rate, because that's going to be huge. The statin market statins are what typically controls the cholesterol market right now in America, and that is just billions and billions and billions of dollars right now. If this drug from Eli Lilly can come in and actually do what they're doing in clinical trials and actually do it on the market, they're going to take maybe not all, but majority of that market share, and they're going to rake in billions every single year. So this is just going to add way more money to Eli Lilly's top line and bottom line, which is why I'm watching this very carefully for any good news.
Okay, cool.
All right, Brandon, final thoughts.
Yeah, another catalyst here for the Disney stock, the $29.99 ESPN offering. I think that's going to add positively to revenue and be a fairly quick contributor to earnings as well.
You know what? I'm not a fan of it because I'm going to pay more. I have a Hulu bundle. I have Hulu Live with Disney Plus and ESPN Plus. It's just going to add like $10 more a month to my bill. I'm not happy about it, but I'm just going to eat the price.
Yeah, and that does suck. I honestly, I'm in the same position you are, but when they're getting NFL football and they're getting WWE, there you got two sets of fans that have no choice.
Yeah. They're getting WWE. I thought that was going to Paramount.
No, it is the ESPN is getting the WWE pay-per-views.
Okay. The
It'll be
pay-per-view. Sorry. What's going to Paramount? Oh,
so,
UFC.
so
UFC is
yeah,
going to Paramount.
UFC is
Yes.
going to Paramount, but they're both part of TKO now. UFC and WWE part of the same parent company. But uh, yeah, WWE PLE is going to $29.99 a month. ESPN. It sucks for a lot of people who are in Peacock paying less than $10 a month right now. Now you're gonna have to pay $29.99 a month. But I have to remind you, for all of us OG wrestling fans here that used to pay $70 to $100 for pay-per-views, depending on the pay-per-view at WWE, we're still getting a good deal compared to what we were 20 years ago. But you know what? Here's my frustration though, Dave. We all cut the cord because we didn't want to watch commercials and because we wanted to pay less. And now with all these streaming services and how saturated the market's gotten, we're all paying more and we're watching commercials again.
I'm not. I
It's
pay for
really annoying.
premium. I hate commercials.
Yeah.
I'll pay for premium to get rid of commercials.
Yeah, but now you're paying even more than what you used to
Yeah,
pay for cable.
I
But
am.
even that with Hulu, like the Hulu Live, you still have to watch commercials.